All right. Welcome back to another fantastic episode. We have another great guest with us today. We have Mike Higgins, who is the international CEO of Ripple Prime. What's going on, Mike? Appreciate you joining us.
Thanks for having us, Jay.
Absolutely, dude. So, you and I attempted this before, and we had an audio only version that came out for the mastermind group that we have. But I wanted to circle back and get a real video version for people, put it out on YouTube, because I think there's a lot of things about Hidden Road and now Ripple Prime that people really don't understand. So, I mean, probably should back it up for a second. Could you give people maybe a little bit of background on yourself and how you ended up, in the position that you're in?
Sure, sounds good. Again, thanks for having us. So, Mike Higgins, as mentioned, I'm the CEO of a few of our international businesses. I've been at Hidden Road, which is now Ripple Prime. Ripple acquired Hidden Road and 100% of its assets. That deal closed just before the end of last year, end of October. And so rebranded as Ripple Prime. But my background is I spent, before helping set up Hidden Road 7 years ago, I spent 20 plus years in electronic trading, multi-asset class, but a lot of time in the foreign exchange markets. And then I joined Hidden Road at the early start of that business, which Mark Ash was the founder of that business, and have largely been in charge of what we call business development, which is the sales, marketing, distribution, and the research and development in and around the prime and clearing part of the business. So yeah, it's been around in traditional markets, and then certainly have made the transition into the new digital world. But taking a bunch of those practices and principles and applying those same applications into into the digital space, which we think is important. Important next step.
I think it's huge, So, with the combination of the acquisitions that Ripple's made, like what's the vision for this? There's G Treasury, you guys got Palisade, you've got Rail, you got you guys. Is this one product stack, or do they will operate independent? Like what does that look like
That's a
for
great question. So let me start with a little bit around what Ripple Prime's function is, and then how those dovetail or intersect with the broader Ripple group and the recent acquisitions, as you've mentioned. So Ripple Prime's function is exactly that. It's prime brokerage and clearing. And so what we do is, I mentioned last time, we do one thing, which is access for institutional names to trade traditional markets and digital markets, and those are converging. And so it's the access point from a credit perspective to trade there. And then a lot of those, if you traded those independently of each other, are capital efficient. And so it's access to our balance sheet. And now our balance sheet, backed up by broader Ripple, is really, adding an impact, or we're the largest non-bank. And again, that's certainly in the digital world, but now in the traditional space. And so we have some pretty innovative ways around taking XRP as collateral, and using that to finance these trades, which has been a very innovative approach to the business. So the Ripple Prime story is really, early on, and now backed up by Ripple will scale, and it's done so already. In terms of broader Ripple, it is focused on the Internet of Value, right? And so you've had the current financial market, in a traditional space, the way Wall Street is wired, on a lot of legacy technologies. Now moving that onto modern blockchains, using the internet fully is unlocking a lot of potential in that space. And so taking a step back, you now have Ripple Prime, which is a capital markets business. The G Treasury acquisition is, a 25-plus-year-old business that services many of the Fortune 500 companies from a treasury perspective. If you look in those, kind of legacy businesses, you see a lot of latent capital around. And so being able to work with the treasurers of these large companies to adjust their portfolios to hold, digital collateral, that unlocks a lot, right? It could be, tokenized repo, right? Instead of having overnight, repo, you could do intraday repo. This is $10 trillion market. Moving the needle, a small amount really unlocks a material amount. And then you have Ripple Custody, which was through an acquisition. Think of that as the vault. You then put on Palisades, which is soft wallets. you could go to large financial institutions as what we call one Ripple, with a full capital market stack from everything from the credit and balance sheet side, the treasury side, buy and hold those, holding them in wallets and in vaults, if you will. So it really is covering what you need to really scale this internet of value is what Ripple's been focused on, Jay.
Yeah, I think y'all are doing a fantastic job, and I don't think people really like you said, there's just a little bit adds a lot. So if people aren't able to trade over the weekend, they're not able to access this stuff, overnight, or on holidays. I mean, it's really like 2/5 of the year that your capital's sitting idle. It's not working for you. Right? So
Right.
if you guys have the ability to access all of those things real time and be able to continue to generate returns on that capital for those businesses, that's a huge unlock. That's a lot of money that they'll be able to generate in addition to what they're currently already doing with
I
the
think, I
treasury
think
unit.
that's right. Just to jump right in on that particular point, you've hit the nail on the head. But double clicking on it, like, if it depends on where you sit in the market. If you're a trading firm, being able to trade 24/7, of course, you now have instead of 225 trading days a year, you have 365, right? So it gives you a lot of opportunity. But I think the area that's under uh, uh, folks don't focus enough on is actually the risk management side. And so what happens is when you trade traditional assets, right, they have an open and a close every day, and they have weekends, or they have long periods of holidays. And unfortunately, there's geopolitical issues that can happen and that could impact financial markets. And when those happen when it's out of hours, what you get the next day are these huge gaps. And so my point being is a smooth 24/7 market where you can move collateral, that velocity of collateral to meet collateral calls shrinks. I think I mentioned it the last time, what we call our MPOR, our margin period of risk. And so it makes it, let's say, better risk management. And in the normal course of business, that's passed directly back to the end investors where they can do similar trades, but with more efficient use of their margins. And so ultimately, there's two sides to the coin. Yes, you get a lot of efficiencies, and that will be passed along to the investors. At the end, the other side of the stick, you get better risk management by having those smoother 24/7 markets.
Love that. Can can you do your camera like on and off for me and see if it'll come back? It's got you frozen on my side.
Better?
No. Weird.
Oh, that happened last time, no?
Yeah, I know, man. I don't know. I thought it was my there
Still
it is.
frozen?
There's better.
Better?
I don't I don't know. Weird. Okay.
We'll keep it.
But that's fantastic. Yeah, I think, this is hugely innovative. And so, I mean, you guys have done this for traditional assets for a long time. How do you see, I mean, uh, does there need to be tokenization? Can you work in the world that exists now? Is there a transitionary period? What do you think the next 2 or 3 years looks like for the actual tokenization of this and the real-time trading? Is it gonna take that long?
Yeah, it's a great question. So let me just talk about kind of the way we see the world today, right? You've had this traditional world, and then through crypto as the first start, you really created a digital world. And I think the thesis has been proving that operating on the modern blockchain technologies, really has lots of efficiencies. And so now what you have is two worlds, right? You have a fiat world where you're paid your income, and you can then invest that in the traditional world. But what's starting to happen is you're receiving your income in the fiat world and you need to on ramp that into a digital world. And so I think what you're going to start to see is more of the fiat products get tokenized and enter into this digital world. And so now the need between going between these starts to become less and less. When eventually you start to get your income, your payrolls paid, and we're not far away from that in the digital world, then the need to go from the digital world to the fiat world, that pain, you just start to stay more in a digital world. And so, in terms of the speed at which that's happening, you already have crypto as an asset class itself. You have stablecoin usage, which is a coin, investing in traditional, in sorry, capital markets, as well as the payment side. So the digital world is well on its way, starting to take things like money markets, and BlackRock, putting in Biddle, right, and Fidelity, and all of these yield enhancing, products that are on chain, is the first step. As you start to, move other capital market businesses like tokenized equities, which are well on their way, you're starting to get more clarity from regulators around how that's going to look and feel. Um, the world is inexorably moving in this direction, and the pace of that is increasing now that we've already, proven out the thesis, using the technologies with crypto. So it's hard for me to give you a timeline, but I would say you're going to start to see this continue to accelerate because the efficiencies are clear over the next, 12, 24 months. I think you see material movements across. And it's sorry for being long-winded, but I'll just kind of answer it that creates then different opportunities is probably the word you use here, because you might end up with certain liquidity pools that stand across both. Trading firms thrive off, fragmentation and global pricing. Prime and clearing are the glue between those. And so I think that structure change will start to really encourage more people to move to the digital world where you can just operate and don't have to keep going back and forth.
No, I think that makes a ton of sense. So, I mean, you've already had president of NASDAQ and New York Stock Exchange, and also, Paul Adkins over there at the SEC talk about the tokenization of the stock market itself and then the back end settlement of that. I mean, you talked about clearing. The DTCC plays a huge role in that. Do you think that do you think the DTCC will continue to sit in that position, or maybe there's like a private markets DTCC type?
It's a really interesting question and paradigm that we're in, right? Because if you think around, the role the DTCC plays is very clear. But take a simple example, which is transfer agents, right? When I buy and sell a share of Nvidia or whatever it is, there's some books and records that keep that record. Blockchain is the immutable blockchain that keeps that record in and of itself. And so, do these transfer agents exist in the same format? Are they blockchains themselves? Is there a combination of those? I think the reality and the outcome, at least in the short to medium term, is there is real partnerships between the DTCC and blockchains, and whether those are public chains or private chains, still to be determined. Um, but it's definitely an interesting paradigm and area that we all have to keep an eye on.
Yeah, I think it'll be really interesting to see which direction it goes. There's a lot of people that are freedom fighters out there, and they want everything to be decentralized and open source and access public. But the banks and institutions and corporations want private permissioned ecosystems that are away from the public view, right? And with the XRPL and the advent of digital identity and credentials, and now you have permission domains and permission dexes, you 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 have to have certain credentials to even be able to access certain environments or uh, participate in certain ecosystems. And I think there's a beautiful blend of both there. And there's a few other networks like Avalanche and Hedera that have either subnets or some other way to be able to have a zero knowledge proof or kind of gating for the participation in certain things. Uh, when I was at Swell in 2023, Ripple talked about digital identity and custody kind of being the base layer for all of this. If you don't have those things fundamentally in place, you're not going to be able to scale the rest of the cool, sexy stuff that we all want to see with the market. And I think they've pretty well got that at this point. When talking about the amendments and stuff, I have a hard time believing that we're going to see DeFi fully adopted in the short term, just because we don't have clear regulation around it, for one. But two, um, there needs to be some oversight and accountability on that. Do you think that prime brokers and broker dealers and RIAs will sit, in some of those pools or the
You,
AMMs?
you nailed it, right? I think that the reality is that you need some permission pools and wallets, for these to look. DeFi as a, is clear. Take Hyperliquid, right? Like make no mistakes, they're winning lots and lots of market share. But when you want to start putting in big chunky orders and you want traditional institutions to move in that direction, which they want to, there's the first stop of who am I interacting with, right? And if there lacks any AML or KYC, it's kind of a non-starter. In the U.S., y- according to GAAP and IFRS, regular financial transparency is the absolute minimum to start. So who you're interacting with from an AML KYC perspective, and then of course, financial transparency from a balance sheet perspective, who am I taking counterparty credit risk with? Now that's a little bit different in the DeFi world because uh, it's more of a hack risk you're taking, right? So we love the problem that it's solved there. So the financial transparency side is kind of solved a little bit different with the CeFi exchanges, but DeFi lacks the AML, and so we'll end up probably somewhere in the middle of these, where we have robust compliance side of things, including financial transparency when you're taking counterparty risk. Um, but I think it's certainly an exciting time, and you're seeing material market share be won by these new innovative approaches like the DEXs, specifically Hyperliquid, more recently.
I was going to say,
And for us, sorry to answer your specific question, as a prime broker and a clearing firm, again, it's access to where clients want to trade and then the cross margining between those. And so, give you an example, take equities. You had cash equities. Now you have equity perps. You're moving towards tokenized equities. The regular exchanges, the regulated exchanges are looking to launch, single stock futures. And so now all of a sudden, you have a handful of different ways, shapes, and sizes to trade the same underlying. That's really interesting. There's new trading strategies that come out of that. A prime broker is the glue to all those things. But again, to kind of get us started in production, there's a certain bar or criteria. And that really, where we lean in is on the compliance and the transparency side. And some of those pools are not quite ready just yet.
yeah. So, with digital assets and the advent of that, eh, you guys could take digital assets that are being held on a balance sheet of one of these corporations and then margin that or take that credit and go do something else with it to be able to generate additional returns outside of whatever DeFi is available to that token. Is that accurate?
That's exactly right. And so we'll use a real life example, right? So you have XRP as an asset and a collateral you can hold. We understand that quite well around Ripple Prime. But if you wanted to trade futures on the CME doesn't take XRP as good collateral. And so instead of transforming that and selling that into dollars to give to your clearer, right, to trade CME, what you can do through Ripple Prime is post your XRP as good margin. We give you dollar credit to trade on the CME. And so now you could be long spot, front month future, capturing the basis trade. It's no different than the traditional world where the Merc was set up, the Chicago Mercantile Exchange, the CME was set up. Many moons ago, it was somebody growing oranges who went to Mr. JP Morgan to say, I want to sell my front month futures, but I don't have dollars, I have oranges. And the JP Morgans looked and said, you do have oranges, I'll lend you dollars against it. In the early days of Bitcoin miners and folks holding XRP, the banks were not ready to recognize that as good margin or collateral against those positions. The world has moved. Ripple Prime is one of the leaders in that. So long-winded answer, but to say we take all forms of collateral, traditional being, good old fiat currencies or US treasuries or gold, to the modern world where I can take, the Bitcoins, the XRPs, the BlackRock, money market funds, and recognize that in my risk system as good collateral and give you other collateral to trade in other destinations that might not take that in-kind collateral.
And you don't have to deal with the tax implications of trading that off or selling it. You're able to maintain those positions and still get some liquidity to be able to generate, additional returns.
It's a huge part of it, Jake, to underestimate, right? Crystallizing your P&L in said asset to get another one is painful for many. And so this is very true in traditional space as well as in the digital world. None of that is different. It's just accepting that collateral, understanding that, setting appropriate haircuts. Now, what's the most interesting that we didn't talk about is the haircuts, And so when I take things like US Treasuries, which, I'm an American living in London, US Treasuries is the top form of collateral and it's very, very liquid. However, I can only liquidate that during certain times. Whereas now, if I have an asset, I can liquidate that 24/7. Of course, it's a little bit different liquidity profile than US Treasuries. Um, but part of setting the appropriate haircut is one, how liquid it is, but two, how frequent you can do that. And so the digital world, the frequency of being able to liquidate that, there's no restrictions. It's 24/7. The traditional world has those restrictions. So it's an interesting um, way of looking at collateral and how that's getting valued, but there's a real positive to the 24/7 nature of what we do.
Yeah, I think that it's just going to be the value that's going to be able to be generated will be substantially greater than what exists today. I don't know last time if we talked about the DRs that we issued against XRP, but we have a depository receipt or a QSIP that's been
Yeah.
issued against XRP that could be reflected with another exchange, and then you could get margin against it that way.
I think the
Uh,
ADRs are coming into this space, and we've been talking about it for a while. So, partnering with folks like yourself, Jake, that, again, come from this traditional world and applying those things into this space is exactly what people or large institutions need, that familiarity early on before they, it's a crawl, walk, sorry, a crawl, run, walk, run approach. And giving something that folks know and can translate is really the right step. So we appreciate and look forward to expanding that partnership.
yeah. And we did that in correlation with RDC, just to be clear. They've done it for Bitcoin, ETH, and Solana. We just happened to partner on the XRP um, opportunity that they created. And I'm sure that they'll do more, like you said. With the advent of hyperliquid and perps, and y'all's access to that, like what does that open up for you guys that you didn't have before?
Yeah. So I go back to that simple concept of what we do as a prime broker. It's more the other clients, the clients of the prime brokers, right? So what you try to do if you're a user is to trade everywhere, but give up the positions to the PB where they net and settle. And so Hyperliquid started to be this venue where you were doing lots of business, but it was disconnected from your prime or your clearer. And so by Hidden Road or Ripple Prime stepping into that space, to connect that, very large financial institutions are now kind of getting that efficiencies that they needed. Uh, again, DeFi has its challenges where we're crawl, walk, run approach into that, but we're very excited to do that. I think we're adding a lot of value for our existing users and new users in the space. So watch that space. I'd say is we're just getting started there, but we need to be careful about how we do it.
Well, for sure. You want to make sure that the right risk parameters are in place. But so, just to kind of hammer home the point that you've said a couple times here, but you guys provide access for people to all these different markets through one centralized counterparty. It allows them to then hedge or manage their risk depending on the positions they're taking and also generate additional return through the margin against the assets that are on their balance sheet.
Precisely.
Yeah. Well, I mean, this has been great. What are you most excited about for the rest of 2026 here? I don't know that there's anything that you can share,
Yeah, I
specifically.
mean, look, here's a whole bunch of stuff. I would say, for us, it's a couple things, right? So, and I'll give you kind of the broader and more specific Ripple Prime side of it. But for Ripple Prime, through the acquisition, it's access to that large balance sheet. In addition to that, it's taking our business from an international side on the digital assets into the US because Ripple has all the state MTLs and a New York bit license. And so we can really lean in and we think give a product and a solution to US names that kind of hasn't really been there. Effectively trading spot perps through our swap dealer, CME. We're working on the equity side, so ETFs and cross margining that for institutional names. So I'd say US with a large balance sheet to come in is going to be really important, and the regulatory provisions to do so. And then adding into that our stable coin. I think that's going to be a really important side of it. RLUSD is an NYDFS regulated stable coin, audited, backed by treasuries and short, and effectively dollars. So the combination of those things is really exciting for us in 25, in 26. And then just the deeper integrations between all of the recent acquisitions that Ripple has done, and really rolling out to the industry globally the one Ripple offering, which is everything from credit to buy and sell said assets to holding those and officially transferring those around, and to modernize collateral. And that collateral mobility is really exciting for us in the year ahead.
Yeah, like I said, I think it's going to be interesting to watch and exciting to see the outcome. If um, if people want to reach out, if they are a larger corporation, what's the minimum that you guys kind of work with? Um, if somebody listens to this and they think, "Oh, I would love access to that. I want to work with them." How do they reach out, and what's the qualifications they need?
Yes, I mean, look, Ripple.com, you can read about all of the solutions that Ripple brings to the markets. In terms of, minimums, again, this is an early industry, right? And so we don't have hard minimums. It's institutions. We don't deal with, any retail investors directly. But if you're an institution looking to get in this space, we want to talk to you, whether it's simply mind sharing and telling you where we see it going, to looking at one of our solutions that could add value to your business, Jay. We carefully coordinate and collaborate with all the industry players, and Ripple.com is probably a good place to get in touch with us as a start.
Perfect. Well, I will share that in the show notes below. Anything else you'd like to leave the audience with?
I appreciate your time, Jake, and you guys being visionaries in the space. We're excited to partner with folks like yourselves, and we look forward to again collaborating as an ecosystem to grow this out.
Awesome, brother. Thanks again for your time. Appreciate you being here. Hopefully, you guys enjoyed this episode, and we'll see you on the next one.